Peter, thank you so much for joining us here at IMpower. You've been having interesting conversations this week about all sorts of the challenges that this industry is facing, but I think you're particularly interested in the evolution of the VC industry and in fact what's happening in terms of what people's expectations are and what demands are around impact particularly. Tell me about that.
Yeah, I think we've been in this legacy of sort of venture capital 1.0 before, from the 80s all the way to the early 2000s. Then in the early 2000s, people began experimenting, particularly within clean technology, that then had this big bubble that burst. But it's actually quite interesting now is that a lot of those funds that at the time didn't seem to be doing so well, particularly Kleiner Perkins, they had a clean tech fund, is now actually performing incredibly well. So it's quite interesting at what time slice that you're looking at venture capital. And I think we're now shifting into this venture capital 2.0, which kind of also coincides with the advent of impact investing, which used to be in philanthropy and venture philanthropy and developmental finance, which then trickled into venture capital. And I was very fortunate to join a lady called Sarah Cohn, who's the managing partner and founder of Social Impact Capital. And we really have been pioneering this strategy. And there are only very, very few funds globally doing what we do.
You said there about impact being seen as a philanthropic exercise in the past. Mm-hmm. That's very much not what it is now, and right. You're very keen to make sure people realise that. Yes.
I'm really sick of having this conversation about awe. I notice that it tends to be a conversation that I have, for lack of better words, with Gen X. And the idea that you would have some concessionary return, I think, is very unattractive to investors, and it's also very unattractive to millennials too, because we want to prove to the market what's possible through a new kind of era of capitalism. Because I think we had neoclassical capitalism before that talked about externalities and all these sorts of things, and economics is largely a really terrible field of theory. But now we're like, oh, actually atmospheric carbon could be an input and we could build businesses around that, and that could be very profitable. And I think that's where there's a sort of gulf in understanding, potentially knowledge too. We've had supercomputers for a very long time in our hands. So I think that's what my mission is.
So it's impact and return rather than awe, as you described it.
Yeah.
What would you talk there about some of the evolving industries around that? It's not just overlaying sort of impact or that sort of investment on top of something. It's actually looking at what can be built that is impactful and around things like infrastructure investment as well. So that's a really great area for you to be looking at.
Yeah, no, so I make a clear delineation between ESG investing and impact investing. And in fact, recently I produced a paper with 10 global leading experts on this. So I feel very lucky to be on this paper, to be honest. But it's a typology of the distinction between impact investing and ESG. And what's so interesting about impact investing and impact-focused venture capital is that you're looking for businesses where the driver of the business is a social or environmental impact. So it's built in, it's intrinsic to the good or service that is being produced, right? Whereas you've got ESG on the other hand, which I think is a management practice. It's not actually an investment lens. It's a management practice that goes into, say, the Fortune 500 companies and retroactively makes them look less bad.
So in terms of impact, what would you like to see happen next, and how would you like to see people viewing it going forward as opposed to what it was seen as in the past?
Yeah, I want people to demand more. In fact, you said impact or returns, or returns and impact. I want to see impact and high returns. I want to see outsized returns within every single asset class where you can have impact. So that's basically the future I want to live in.
Where's that push coming from? Because I guess it's very sort of stereotypical to say it's the younger generation who care, but there are some very forward-thinking older investors who are really looking in this area now and wanting to put their years of expertise into this area too.
No, totally, and it's quite funny. So I work with a number of families around the world, multi-generational. You have, I sometimes say, the woke or the based Gen X. Then you've got grandma and grandpa. Grandma and grandpa are surprisingly enlightened because they have grandchildren that they care about, and they also have access to information and know where the world is heading. So I think this idea that you want to provide a better world as you leave is part of that ethos. And then, of course, the younger generation and Gen Z, where it's kind of given. There's no conversation or discussion around it. They're like, of course we're investing in this way.
So there's a great impetus there. What are the key challenges to actually making this succeed? I guess one of them is, how do you measure success? We've talked about the fact that there's different regulation and different challenges in different parts of the world. It's very hard to globally scale for that reason. So what would you see as the key challenges now?
Yeah, I think a lot of it is to do with access. So historically, people who have had access to impact products have been high net worth individuals and accredited investors, and slowly the bar has been dropping in that regard. We actually collaborate with a firm that we really like called OpenVC, and they're trying to democratize access to venture capital, which just so happens to be an amazing growth asset class. So it's kind of compounded impact because they're looking for alternative managers, very diverse, doing things that are different, and then also allowing the general public to participate, which I think is amazing. But that's one fund, right? And when you do the math around global impact, which is truly impact and not greenwashing, right? Because apparently 2/3 of the global economy is now an ESG product. So if you really drill down and see the managers like ourselves truly doing impact investing, it's like a drop in the ocean of capital. And the way that I think we open that up is kind of around regulation, actually. I think that also support systems and providing incentives for new managers to push in this direction is really important. I think greenwashing really needs to be addressed globally. In the States, where our firm is based in New York, the SEC now is pushing really heavily into that area about, put your money where your mouth is. If you're really doing that, we really want you to see we really want to see quantification.
And do you think that the very rapid uptake of digital products and the use of AI, particularly, I suppose, that's been intensified by the pandemic and people's drive towards that, do you think that will help with data being available and AI being used in a way that will actually put proper figures on some of this too?
Yeah, unfortunately, I think it's more conceptual than it is just simply throwing machine learning at it. I think we need to get more specific when we talk about the kind of impact that we want to generate, and very clear and very precise about the logical end of what we're trying to achieve. So think about materiality, right? The materiality of this particular environmental innovation or intervention. And then I also think that, I think that's it, really.
I think going forward it's going to be amazing to watch this space. Are you having interesting conversations here at IMpower? Has it been a good chance to speak to people about all these ideas and concepts?
I've loved it so far. There are so many different breakaway sessions and panelists that are really inspiring, and people are really starting to pay attention, again, to this idea of materiality and causality with the investment products that they're developing or investment strategies that they want to launch. And it's been very interesting.
That's great to hear. We really enjoy having you here, Peter, so thank you so much for joining me today.